BTIG's top technician, Jonathan Krinsky, sees a bigger breakout forming in the group. He joins me now to make the case. Jonathan, great to have you on. So what do you see brewing here in energy coming out of a pretty deep trough?
Hey, Mike. So, yeah, energy is actually the second worst performing sector over the last 3 months, but it's the best performing sector over the last 5 days. And, if we look back over the last couple months, there's a pretty sizable gap down that happened starting on Liberation Day in early April. We know that most of the indices and most sectors have gone back and filled and exceeded that Liberation Day gap, but energy is still about 8 or 9% below that gap. So I think that's the logical upside target. We put out this note yesterday to clients suggesting there was room for upside in the energy sector, and then obviously today we have the Mideast escalation headline. So we're not obviously rooting for that, but that's certainly a tailwind. But I think the setup is there regardless of any headlines, because you have this bit of a factor unwind you've been mentioning before, where some of the leaders are probably looking to pause here, and some of the lagging groups like energy are certainly getting a bid, whether it's short covering or whether it's some catch up trade. So yeah, I think you have that setup, and we'd be looking for a continuation of this move higher in the coming weeks.
Yeah, I'm glad you mentioned that there is this broader move happening here where, it's going from large to small, from growth to value, from the popular and crowded to the neglected and oversold. Do you think that this can continue on in a relatively orderly way? I mean, obviously, we remember what happened in February when things started to snowball, and it did create a little more portfolio stress.
Yeah, I think that, if we think about the high momentum names, they've kind of, as a group, retrace back to the highs we saw in February. So we should expect some sort of reaction, whether that's a price pullback or just a pause consolidation. That's to be determined, but I think near-term upside is probably a bit limited there. And then conversely, the low momentum names we're starting to see emerge. Now, some of those are actually also starting to get a bit extended, but typically you do get a bit more of a squeeze or unwind when you have these momentum trades, and that's the question, right? We never know how the high momentum names are going to react. Sometimes you do just get that sideways kind of churn. I think that's probably the more likely scenario, but as we get towards the back half of June, that's when the seasonals do turn a little bit more negative, and you could see some month end selling in some of those winners as we head into the end of the month and the quarter.
Yeah, I guess that brings up this idea that, fine, we can just sort of rotate around and have the sort of overheated parts of the market cool off while some of the stuff that has been, kind of left behind do some catch up. That all sounds great, but maybe that operates at a net negative for the S&P 500. I mean, how do you see that playing out, as you mentioned, getting into a tougher seasonal period?
Yeah, I mean, you're kind of pushing into those prior all-time highs for the S&P. You can probably grind up a little bit higher. We don't see a ton of upside, probably beyond the 6,100 level. With that said, there's good support now around 5,800. We've been saying as long as 5,800 holds, bulls, hold the upper hand. So I think, until, unless there's some exogenous event, right? If this Mideast escalation continues, something like that, I think the most likely scenario is a modest, mild pullback, into that 5,800 level. I think to get below that, you're going to need to see some of those mega cap names see some more sizable selling pressure, which we just haven't seen evidence of that yet. But again, I think that the last 5 to 10 days of June could be that window where you see a little bit more of that.